Hey everybody, hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for Wednesday, November 13th, 2024. Here's the daily chart, and what we had going into the day was, I've been talking about this bull channel, and this rally, you can count several legs up, lots of overlap here. The bulls did a good job getting a breakout above a lot of bars to the left and follow through, but the bars are getting smaller and smaller. So the bulls losing momentum up here, far above the moving average. And the more we lose momentum, the more traders will look to buy a pullback. So good rally, but probably going to pull back soon, but also likely that this breakout gets a second leg up. Also likely that we need a second reversal before we get any major reversal. So the odds were there would be buyers here, buyers below this bar, and we'll have to retest the bull trend's extreme before we get any major reversal. Ideally, the bears want a trendline break that is relatively strong, although because we have several legs up, it may take less to reverse this bull leg up because bulls might be exhausted. We have several buy climaxes, deep pullback, tight trading range, tight trading range. The bulls may not look to buy for several bars and a couple of legs sideways to down. We're testing the bull channel line and we're finding sellers up here. It doesn't mean bears are aggressively selling up here, but the bulls don't want to buy here where they've been selling the whole time. They'd rather buy, the bulls don't want to buy up here where everyone has been selling the whole time. They want to buy a pullback instead. But as far as going into today, probably buyers below this bar. It's a weak stop order sell. And if we trigger the buy, it's a high one. It's a weak high one, bad signal bar, and context isn't great. High ones typically pull back deeper. You get deeper pullbacks because any trader who bought up here is disappointed with the pullback. 5-minute chart. Here's what we had going into the day. We have a tight trading range. Yesterday, big down, big up, big down again. So we're in a trading range, and we're getting, at this point, we have a lower high here. We have a higher low here. Not a great shape, but it might be a contracting triangle. The market is getting squeezed. This channel down from the bears yesterday might be strong enough for a second leg down, and this might be a two-legged correction. One, pullback, two. So there might be more sellers up here for a second leg down. But as far as the big picture goes, we have a strong enough rally here that has not had a second leg up that is probably going to get a second leg up. We had a bear trend, strong trend line break, maybe a higher low, major trend reversal, but this, like I said, might need its own second leg down, and traders might look to buy lower. Some possible test targets, we have yesterday's low. The prior day's high and prior day's low is always important support and resistance. And the reason for that is that most bars break out of the prior bar. That's true on the 5-minute chart, true on the 15-minute, true on the daily, true on any chart. So we expect most days to at least test, if not break out of the prior day's low or high. Today we're opening sort of in the middle. It's anyone's guess which we go to. And we got bar 4. Bar 4 is a strong enough bear breakout for a second leg down. Yes, it might be leg 1, pull back, leg 2, but the bulls have to do something fairly special with bar 5 to make me want to buy bar 5. Bar 4, in other words, we need a second reversal. So bar 4 probably going to get a second leg down. Sold off further on bar 5. Further trapping traders who bought below 3. Think about if you bought below bar 3. Better yet, think about the stop order sell below 3. Not a good stop order sell. It's a bull reversal bar, bull trend bar closing on its high. And then you get bar 4. The odds are traders did not sell below bar 3. And because it wasn't a great stop order sell, what's the opposite? A limit order buy. So you have bulls buying below bar 3, and then 4 is their entry bar. And then 5 went even further against them. So the bulls who bought below 3, what are they thinking? They're thinking, darn, I bought below 3. The market went against me, went even further against me. Now 4 and 5 is strong enough for its own second leg. I better get out if I have the chance. And then look at bar 6. We tested the low of bar 3, went a little bit further, tested the moving average, but the odds are there are sellers in this area for a second leg down, and that's what we got on 7 and then bar 8. Now, where did bar 8 test? Again, let's focus on stop orders. Bar 44 yesterday. Stop order buy 44. 45, good entry bar, more follow through. 46, traders are trapped down here. Any trader who sold above bar 44 was trapped into a losing trade. What are they going to do when we retest that price? They're going to buy back shorts. And any bull who did not buy here and missed the rally is also going to buy, looking for a big second leg up. So now at this point, we have the bear trend. Bear trend, trend line break, retest of the bear trend extreme. And now the bulls are hoping this becomes a higher low major trend reversal. Very deep pullback, so the odds of this being a bull trend are low. But the odds that this breakout gets a second leg up is high. So probably buyers down here. And you can see based on bar 8 that traders bought down here into the close of the bar. Now 7 and 8 probably need a second leg down. Bar 7 and bar 8 went a far distance down. But the problem is now we're low in a trading range. So traders don't want to sell here. If anything, they will sell a pullback. 9, we rallied, and now we rallied from the low of 8 to the high of 9. Even though we only see tails on this chart, if we look at a lower time frame, this is a bull breakout. And the bull breakout from the low of 8 to the high of 9 is strong enough for a second leg. Think about any trader who, you can think about it from both sides. If you're a bear and you sold the low tick of bar 8, the market went all the way up to bar 9, you're trapped. You're trapped into a losing trade. If you're a bull and you did not buy down here, and then you watched the market rally all the way up here, you just missed a pretty good move by the bulls. So traders are looking to buy down here. Disappointed bears looking to avoid a loss or minimize their loss, and bulls looking to buy to catch a second leg up. So now we have confusion. Big down, big up. The bears need a second leg, and the bulls need a second leg as well. So probably buyers below 9 for a second leg up, and then the bears might try for a second leg down. We tried for trend resumption below bar 10, reversed up, weak low 1. We're getting a bull channel, trending closes, trending opens. This is a very weak bull channel on a smaller time frame. Then we got the upside breakout, bar 13. 13 is climactic. It's also 2 legs up, 9, pullback, 13. Testing the close of 6 where traders got trapped before. So that's going to be a resistance area, probably sellers up here. But 13 is a strong enough breakout for a second leg. So probably buyers below, buyers at the 12 high, buyers below 13. We pull back 14, then 15, fall below 13, and we start rallying for a second leg up. Becoming fairly tight in here, lots of overlap and confusion. The bears still want a second leg down after 7 and 8. We had a reversal attempt on 11, reversal attempt on 15, and then we tried again here on 17, but a very weak resumption attempt by the bears. We also have to keep in mind this might be a higher low major trend reversal. Again, bear trend, trend line break, retest of the lows, and then the bulls try to rally for a bull trend. At a minimum, the bulls want a trading range, and the top of the range could be all the way up here. The minimum target for the bulls is one tick above 63 yesterday. Leg 1, deep pullback. Leg 2. Also, look through here. This looks like a very weak rally. Looks like a leg in a trading range. That is true. But where have the bears made money in here? Say after bar 9, where have the bears made money? Certainly hard to make money with stop orders selling below 14. Maybe you sell above 9 and you take a quick scalp. But other than that, easier to make money as a bull than a bear in here. This is becoming a tight bull channel, which is a breakout on a higher time frame chart. So probably not enough reasons to sell for the bears. Hard to be long, but at this point, the market might be always in long because of the big picture context. Sell climaxes, possible higher low, major trend reversal. What about selling below 19? Well, it's like I said, tight bull channel, not ideal, plus it's an inside bar. Inside bars are trading ranges on a smaller time frame. So if you're selling below 19, you're selling at the bottom of a trading range against a tight bull channel. More traders are probably buying below 19, and that's why we went outside up. Outside bar 20, but now we're at the top of a bull channel. Probably sellers up here, and traders would rather buy a pullback. But again, bears having a hard time making money below bars, so traders can hold long, probably always in long. We just continue to drift up. 24, buy climax, probably going to pull back, but strong enough breakout for a second leg, closing above a lot of bars to the left. And again, at a minimum, bulls want to get above 63. We also have not broken out below the prior day's low or the high. And at this point in the day, it looks like we're heading to the high. We may have had an early low of the day. So 24, maybe a measuring gap. Always different ways to measure it. Maybe you start from 20, and that's the first target. Maybe the next target is here. That one takes you to the prior day's high. And then if the bulls are lucky, maybe from all the way down here. But 24, a little bit climactic, consecutive buy climaxes, likely to pull back, but pullback does not mean reverse. So minor reversal likely, but traders will buy it. 26, 27, bear breakout and follow through, but 26 was an outside bar, and 27, we have tails on the bars, and these tails cannot be ignored. Look at 26. We sold off, and then we pulled back into the close. We rallied on 27, sold off on 27, pulled back again. That's already 2 legs down. Plus, look at bar 23. We have a trading range bar. It's a doji. It's an outside bar. We had a bull breakout attempt. It failed. Now we have a bear breakout attempt below the bar, and that's probably also going to fail. We also have the moving average support, and again, tight bull channel. Traders will buy every trend line break. This is one of those situations where the bears probably need at least one more bar. They need 28 to be a strong bear bar. Whenever you need one more bar, the odds are you're not going to get it. In other words, this is a near always in flip. Bears just want one more bar to be sure that the always in is flipping. Because of that, bulls will buy, betting they won't get it. And in this case, the bulls overwhelmed the bears, and the reversal attempt failed, as 80% do, and we rallied. 28, strong enough bull breakout for a second leg, but lots of overlap. At a minimum, bulls would probably like to buy at the 27 high, maybe the midpoint of the bar, maybe the bottom third of the bar, but not ideal to buy up here, top of a range. Follow through, so breakout and follow through. For the bulls, we pull back on 30, and we're testing that high, maybe the midpoint of the bar. But now probably sellers above 30, but still tight bull channel. So sellers above 30 are profit-taking bulls. We have open gaps on the way up. That's a sign of strength. But look at the overall structure of the day and the past couple of days. This, to me, looks like a trading range. We're down, we're up, we're down, we're up. So traders are buying low and selling high. We might be getting high in the range, so it can be hard to hold long here. But you do have the added information that most days or most bars are breakout bars, and that includes the daily chart. So there is a real probability that we go up to this blue line, the high of the prior day. Bull breakout 32, but big tail. Some traders might buy the close, others want to buy a pullback, maybe buy the breakout point. We broke out above 63 and we closed below it. Would have been better for the bulls if they closed above it, but the bears still have nothing to sell, and then followed through 33. So we did have buyers on the close of 32, but we rallied on 32, pulled back, rallied on 33, pulled back, and we have several attempts up in an overall trading range environment. So this might be a dangerous place to be holding long. So this is an area where it's okay to get up below a bar like 34, bear bar closing near its low, because the risk is real that we just pull back to the moving average. Deep pullback 30, 35, but still probably a minor reversal similar to 26, 27. So traders will buy down here. Look at bar 31. Trading range bar, not a particularly strong signal bar for stop order buyers, but the trade worked. Anyone who sold above this bar got trapped, so the high of bar 31 or 30 becomes support. We come back and test it, we bounce, probably going to get a second leg up. Tried to reverse again, 39, okay for always in bulls to get out below 34 or 39. Tried again for a second leg, but very tight trading range, possible final flag, and very high in the overall trading range. Getting a breakout of this bull flag, but I said possible final flag, so this might be the last breakout before we enter a trading range and breakout mode. 44, bear breakout, strong enough breakout for a second leg down. Sellers at the 43 low if we get there. Breakout and follow through, 44, 45, finding support at the moving average in the bottom of this trading range, but the odds are there are sellers above 45 for a second leg down. 4-bar micro channel, first reversal up should be minor, sellers above for a second leg. The bull's trying to rally, but the rally is weak, and look where we tested. Came very close to the 43 low before we found sellers. We tried again, 1, pull back 2. We're testing the high close of 42. But think about what happened on 42. If you're a bull and you bought the close of 42, thinking this might be a buy the close rally, 43 was a disappointing entry bar, and then the market went far against you, 44, 45. So if you're a bull and you bought up here at this red line, what will you do when the market retests that line? You're probably going to look to sell, especially because the retest is weak. It's 2 legs up with a lot of trading range price action. And that's what we got, 54, 55, 56, 3, 4, maybe even 5-bar bear micro channel. Tight enough micro channel breakout for a second leg down. So sellers above the first pullback. Now, is there any reason to buy 57? Would you buy above 57? Would you buy below it? I don't know. Maybe you buy below it, bottom of a trading range. But because this is an overall trading range, the open of the day is often a test target. On a trading range day, because the bulls and the bears are fighting over control of the close of the bar on the daily chart. So here's the open of the day. We fell below it, we went above it, trying to stay above it, but becoming a trading range up here, sideways for about 20 bars. And that makes breakout direction closer to 50-50 rather than favoring the bulls. So there's a real chance we break out to the downside. And because it looks like a trading range, big down, big up, big down, big up, we might be high in the range. We just tried to get to the prior day's high. The risk is real that we get the bear breakout. Bar 58, bear breakout, strong enough for a second leg down. And think about what I said. Or just think through stop orders. 58, good looking bear breakout. Anyone who did not sell below 57 or bought below 57, those traders are trapped. Think about the bull case. You buy below 57 because it's a bull close, maybe the bottom of a trading range after a rally. So there's an argument to buy, and there's an argument to not sell because it's not a very strong bar to sell with a stop order below. 34 is a good example of a stop order sell, and not necessarily with context because tight channel, but look at the bar. We rallied and then closed on the low. Same with 44, closing near its low. Bears want to sell below bars like that. Bears do not want to sell below bars like 13. And you can see there were buyers below that bar, not sellers. Same with 24. Same with 32. We didn't quite get there. Or maybe we did. Close enough, but you get the point. Same with 40. So not a great sell below the bar, but we got 58. So same problem with up here. What are you going to do if, there's three scenarios. You either bought somewhere up here, or you did not sell, or you did sell. But let's say you either bought or you're flat and you see 58. If you bought 58 or bought anywhere up here, you're disappointed with 58. If you bought 57, you're disappointed with 58. And if you're disappointed, you're going to hope for a rally to get you out at break even. And if you missed the sell below 57, guess what? Bears are going to set limit orders to sell at the 57 low because 58 is likely to get a second leg down. So we test the low 57 on 59, but this might be a leg count reset. Tight trading range, maybe it's a triangle, lower high, higher lows, and then a bear breakout, retest of the triangle, retest of the breakout point, and then we continue lower. Low one short 60. There actually might be more sellers below here. The context is good for expecting lower prices, and the signal bar is decent. And then look what happened. We sold off for several bars, and that's a strong enough breakout for a second leg. The open of the day still should be a magnet, but it looks like at this point the market is ignoring it and going straight through it. You can see we fell below it, retested it, and we started going sideways on it. Low one short, 66. But now we're getting to the layers of support from before. For example, we had a stop order sell below 19 that triggered on 20 and then reversed up, trapping traders. This becomes support, so probably going to bounce somewhere around this price. And look at that, bar 68. So at this point, we're probably going to start to go more sideways. 68 looks like a strong enough bar for a second leg up. And then 69 you can include, so 68, 69, strong enough breakout for a second leg up. Tight channel, so maybe better to wait for a retest before looking to buy. But the breakout continued. Now we have a 5-bar bull micro channel, buyers below, maybe at this breakout point. 72 sells off, pull back deeper. We actually tested the bad buy signal bar 67. One more time, I will explain the same thing I've been talking about. It's really important to understand breakouts and trapped traders. 67, not a very strong stop order buy, but look what happened. So you have bulls who did not take the buy and they missed the rally. You have bears who took the opposite side. They sold above 67, betting that it's a bad buy and it's a tight channel. The first reversal up should fail, although technically this was a second reversal because 64, 65 was the first reversal. But in any case, tight channel, bears expecting reversals to fail, so they sell here and they get trapped. What are they going to do on a retest of the price where they got trapped? They're going to buy. So everybody buys for a second leg up. Minimum target for the bulls is one tick above 71. That's up here. Another target, maybe the close of 59. And then we get around that area and start to go sideways. And then we find sellers after 2 or 3 legs up, maybe 1, 2, 3. But overall, this looks like a trading range. So it's also getting late in the day, so buy low, sell high, scalp, but maybe not worth trading at the end of the day, especially if the market is entering a tight trading range. Bear breakout 76, 77, but possibly just a sell vacuum of support because it's a trading range. It's probably buyers. The problem with such a move like this, looks like such a strong move, bear bar closing on its low, shaved bear bar. The price is in such a hurry to go lower, but you just don't know how many institutional bulls are waiting to buy down here. And then look what happened on 78. All of a sudden, the selling disappears, and we find buyers low in the trading range. For the trades I took today, I had an appointment at noon today, so I only traded up until about 11:15 Eastern Time. Also, I mentioned in my past 2 videos, I did not take any trades on Monday and Tuesday. So I came in today knowing I had only the first couple of hours to trade and that I had not taken a trade Monday and Tuesday. So my mindset was to be a little bit more aggressive today, just to sort of challenge myself, take trades, and learn from mistakes, but trying to do good things. And so my first trade of the day, I thought 4 needed a second leg. I saw 5, and I sold during 6, and it sold off. But when it came back to my entry price, I exited at break even, disappointed. I thought maybe we sell off, pause, sell off again. But I sold again at the bar 3 low during 6, so I sold here, and I exited below bar 5. And when I look back, I think, yeah, I could have held on to the trade longer. I could have gone for the bad buy signal bar 47, or I could have gone for the stop order I showed earlier, 44. But my actual risk was tiny, and I got several times the actual risk, so that's okay. And then this trade, I sold above bar 9 during 13. My thought process was 7 and 8 needs a second leg down, but 8 and 9 needs a second leg up. So I waited for that second leg. I actually expected 13 to be a climactic bar, but I was hoping it would sell off, and because it ended up closing strong, I thought it needed a second leg. So I didn't want to be short anymore, but I took a chance, and I ended up exiting at break even during bar 16. But that was it. Just 3 trades today. 2 break even, 1 winner. And for stop orders today, nothing great through here. And there's probably a swing buy above 11. It's a second reversal. But it's such a tight trading range at that point with a doji signal bar. Not really ideal. It's relatively hard to get long with stop orders here because of all the trading range price action. But at some point, maybe after 8 and 9, it's always in long. Maybe after 13. And so you can buy above any bull bar. 15, but not great. Top of a range, big bar. Maybe 17's better. But really not ideal for stop orders. Traders are buying with pullbacks. Traders are trading with limit orders. Even though it's a channel up, traders are buying on limit orders during pullbacks. There's a stop order sell below 34. It's aggressive, and you want 35 to be a stronger entry bar. So if you sold, you're probably disappointed. 35, you just get out. Kind of hard to buy up here, high in the range, tight trading range, and late in the move. And then maybe a sell below 44, but again, a weak entry bar, so maybe just bail out of the trade, look to sell again later. Sell below 54 for a swing. Sell below any of these bars for a swing. Even 57 you can sell below. 60 low 1. Sell to close here. 66 low 1, but that's more of a scalp. Because low 1s typically pull back And just think about the sell to close bears. I said it's probably sell to close in here. 63, you sell to close, but you're disappointed. So you're probably going to have bears buying back shorts down here, maybe a little lower. There's a buy above 68. And then a sell below 76. Limit order trades, we have probably sellers above 2. Maybe buyers below 3, but they're trapped on 4 and they're looking to exit, so a sell at the low of bar 3. Probably sellers above 8, but that entry bar was weak. Buyers below the low 1, bar 10. Strong enough breakout here for buyers below. Buyers at the 12 high, the 13 low. And every sell in here is weak. This trading range bar, the doji, 16, buyers below. Inside bar 19, buyers below. 22, buyers below. 25, buyers below. And down here, 23, trading range bar, bull breakout, sideways, bear breakout attempt, buyers here. Plus you have the moving average. Weak sell, 29, buyers below. Buyers below 33, but after 34, this might be an area where bulls just look to get out, so aggressive to buy here. Then probably a bad low 1, 38, buyers below, but 39, bad buy, sellers above, and sellers above 34. Probably buyers below 40 coming in here. Really tight trading range through here. Traders are buying low and selling high. 3 or 4 bar micro channel, sellers above 56, and then really tight channel with no pullbacks from 57 all the way down. First reversal should be minor, sellers above 63, but then buyers below 64. Weak reversal, buyers below 71 for a second leg up. In this case, we pulled back deeper to the 67 high, buyers there, but then 2 legs up, and we're stalling high in the range. And we're testing that breakout point I mentioned earlier, 57. So sellers at that price, and look what happened. But then there's a buy here. It's aggressive with this much momentum, maybe better to wait. And once you get that hesitation, maybe you buy a pullback in there. But late in the day, maybe not worth it. Today was a trading range day. It was a more bullish trading range day. We closed just above the open. We had this rally that lasted a lot of bars. The sell-off on the open was weak, climactic. This was climactic, but the buying was more sustained. But overall, down, up, down, up, down. Overall trading range day. Where do we go tomorrow? I said the bulls are lacking momentum here. I think that increases the chances that you have sellers above bars. We're far above the moving average. We have 3 or 4 trading range days. Traders are looking to sell high and buy low. So and we had an inside bar. So probably sellers above and buyers below. Any breakout will likely pull back within a couple of bars and retest the inside bar if we do get a breakout tomorrow. I think the problem for the bulls here, I mentioned earlier, is that we're far above the moving average and there's no more momentum. We've gone sideways for 4 bars. And that increases the chances we have to fall lower to find buyers, and that might be a breakout point. That might be the start of a channel, which might be here. Breakout, pullback, channel, which is clear on a smaller time frame. But strong enough rally for a second leg, it is possible. We have a shallow pullback here and then a second leg up, breakout to the upside. So we'll see. All right, thanks everybody for watching, and I hope everyone has a good night.